Let's talk about that SpaceX issue, generating billions of dollars worth of passive buying as it joins the Nasdaq 100 today. Nicholas Owens of Morningstar has a sell rating and $62 price target on the stock, writing, "We see SpaceX shares as overvalued. Index funds buying the stock will likely offset some, but not all the supply of shares coming available from lockups." He joins us now for more. Nick, welcome to the program. It's good to see you. When I buy SpaceX, if I buy it, what am I buying? What is the company?
Well, it's three big divisions. Their rocket launch, which is a sort of the smaller of the three, Starlink, which is really the highlight in terms of revenue and profit generation, and then this newer set of businesses around AI, formerly known as XAI. And that's kind of really the swing factor in how you would get to any kind of valuation analysis for this company.
And Nick, is the NeoCloud part of the business right now, or just a bolt-on?
That's an interesting question. I've looked at it primarily as that, let's say that's the primary play. And then certainly these rental deals that they've announced show that there's some value there. But you have to factor in this very long list of other ambitious things that might happen the next, 20 years, cities on Mars or what have you. Those are hard to value, and we can talk about how you might do that. But the main story that I've seen so far for XAI is the compute and the infrastructure play, which is what drives the idea of putting data centers in space.
So we know the quiet period for SpaceX ends today, and so at least 6 sell-side firms have begun coverage. They have buy ratings. Some of them have pretty lofty price targets. The highest one we've seen so far is Raymond James rating SpaceX a new strong buy with a price target of $800. A lot of these are pie in the sky in the same way that SpaceX's plans might be described as pie in the sky. But the calls do offer investors some kind of framework. How do you think about the framework that these calls offer in terms of valuing SpaceX, or how analysts are thinking about valuing this business?
I think the framework, especially when you get into AI, in the filing, for example, they talk about a $25 trillion addressable market, and I think what you get to with any number of these types of forecasts where they're talking about trillions of dollars of revenue this decade and so forth, you're making what I think are wild leaps of speculation around what is achievable and likely in what is turning out to be a more competitive market. Than the story is, maybe there's overinvestment in compute, and maybe the enterprise value isn't what you might think. That's basically my point of view, is a little bit more down to earth.
There's also this anticipation that SpaceX is going to merge with Tesla at some point, and a lot of people think of it as a question of when rather than if, because of that common denominator of their AI ambitions. Combining them, on the one hand, would make it easier for them to borrow funds to fuel their AI ambitions. How are you thinking through the likelihood of this?
I think it's pretty likely. My colleague Seth and I have talked about it, and it seems, given where some of the stock and valuations and the market caps are, it seems like SpaceX might issue equity to buy Tesla, or if they can, and that the combo makes a certain amount of business sense and allows them to share resources and on these big projects. So yeah, we think it's likely within a year.
And then can we just finish on this so-called staggered end to the lockup? As I understand it, slightly unusual the way it staggers over the next 6 months or so. Can you just briefly describe that to our audience and the implications it might have?
I think it's a really important question. So your usual IPO lockups are typically 180 and 360 days. This one has them pretty much every few weeks, starting at the end of this month or 2 days after, whenever they release earnings. And it's some pretty big chunks. My guess is it'll be 7.3% of the float will come on in this first lockup after earnings. And that's more than the IPO was in terms of supply of shares. And I think it's prudent to assume that insiders who can sell during these windows will. If you think of their cost basis being from a long time ago, they're indifferent probably between, if it's trading for 150 or 190, it's all good. And the amounts are significant. The Nasdaq 100 happening today, given the float weighting and so forth, that might only be $8 billion of demand.